Let's be honest. One would have thought with all the current activity that's going on in the economy and geopolitical front, that interest rates would have been higher. However, we've been able to sustain all of that. And the 10-year Treasury has been staying relatively low. We actually even got below 4% less than a week ago. But today, all of that changed. The mindset of the traders has pushed that 10-year Treasury up an entire point today. And now we are sitting over 4.2%. What does that mean for interest rates? The highest interest rates that we've seen in well over a month. And what are the culprits? Is it issuance by the federal government? Is it inflation? Or is it a warning sign of things to come that we are going to have to deal with higher interest rates at this point? So let's deal with them all in order. Number one, bond issuance. Make no mistake about it. Wars cost money. Moving assets into that region, bombing campaigns, everything that we're doing right now in Iran is only going to increase government spending on a military front. Well, the government has to give issuance, which means it could be inflationary. So the yield needs to go up. So that's number one. The second thing is inflation. We had CPI come out today, came right in at forecast. That's great. But as I just mentioned, traders are forward thinking. They're looking at 3-6 months down the road, and make no mistake about it, gas prices have escalated, which is only going to show up here in the next month or two. The other thing it is doing, it's disrupting the supply chain. How quickly are we going to be able to turn that around, get everything back flowing, which leads me to, do we have a warning sign? And I believe at this point we do. We're coming up on 2 weeks. It does not look like there's an end in sight. I mentioned the other day, I had concerns over who they nominated as their next supreme leader. It was one of his sons. Even Trump came out and said, not good. So if you're a trader and you're looking at this, you're like, okay, we know inflation's going to spike. We had that non-farm payrolls at minus 92,000, but maybe it was just a fluke. We're now in the camp of our biggest fear is stagflation. So you're sitting here and warning signs are flashing, and therefore you saw a huge sell-off in the treasuries today. So who am I? My name is Kevin Weedmark, AKA the Mortgage Mouth. Each and every day I come to you with another episode of the Daily Dose. Make sure you hit that subscription button so you never miss a beat. Float or lock. I am still in the flow camp. If you've ridden it this long, like I said, always, if you have a reason to lock, you have a purchase, you need cash flow. We should have been pulling that trigger a week and a half ago, like I was screaming from the fences for. I think that this war ends here in the next week. I think that we could get back to something a little bit more stability within the next month or two. And if you can wait that long, I'm in the flow camp. All right, y'all. Have a good evening. Cheers.